U.S. oil benchmark hits 7-year high, Yellen predicts inflation will normalize in the second half of 2022, and one small business owner testifies to Congress that the U.S. economy could come to a screeching halt. In this video, I'm going to summarize how these three news articles could impact small businesses. Welcome back to my channel, Mystery Money. I wanted to bring you up to speed with some of the issues that are making headlines recently. If you like this kind of video, click that like button or comment more in the comments below. Make sure you check out the articles in their entirety by clicking on the links in the video description. Now let's get into the articles. Oil futures rose on Monday as investors focused on the tight supply of oil-producing countries. These countries are reluctant to increase production as they try to make up for lost earnings during 2020. All this is leading to soaring oil prices. West Texas Intermediate crude for December rose $1.07 or 1.3% to $84.83 a barrel on the New York Mercantile Exchange, after trading at its highest since October of 2014. This is going to make 9 consecutive weekly gains, or the longest streak ever according to data going back to 1983. Spreads in the oil industry are continuing to tell the tale of tightening U.S. supplies, and I'm positive that you have noticed the price at the pump has risen over the last few weeks. We have noticed over the past several months that although my drivers try to get the best prices they can on fuel, there's still no avoiding the price increases. These price increases are ultimately going to be passed on to the end user of the products. Typically this time of year, the price of crude oil begins to drop because the demand is slowing down due to less traveling over the winter months. But that hasn't been the case over the last few weeks. So only time's going to tell what the normalization rate of a barrel of oil is going to be. Treasury Secretary Janet Yellen said on Sunday that she doesn't expect inflation to return to a normal rate until at least the middle of next year. But that doesn't mean that the U.S. is losing control of inflation. Secretary Yellen was speaking to CNN's State of the Union, where she predicted that this spike in inflation will be temporary. To quote her, "Americans haven't seen inflation like we've experienced recently in a long time, but as we get back to normal, expect that to end." When asked by CNN's Jake Tapper exactly when inflation would fall back around the 2% target area, Yellen said, "Well, I expect that to happen next year. On a 12-month basis, the inflation rate will remain high into next year because of what's already happened, but I expect improvement by the middle of end of next year." Yellen also said, "I don't think we're going to lose control of inflation." She's rejecting criticism from the former Treasury Secretary Larry Summers earlier this month, where he stated that inflation was running out of control. Yellen said that the rise in inflation is not so much a policy problem as one caused by external factors. The pandemic and supply chain bottlenecks are all leading to issues with supply. Because the COVID crisis diminished all the spending on services, and that caused the money to basically be reallocated into goods, she's basically saying that the supply of goods to Americans have increased substantially, but there's still going to be pressure going forward. She also expects that the supply chains will get back to normal once the pandemic slows down a little more than it has, and as Americans rejoin the workforce and thus manufacturing can ramp up to make more of those supplies, she feels that that'll help the amount of goods in production to go up. Yellen also said that lawmakers are considering taxing the unrealized capital gains of billionaires as a way of funding President Joe Biden's social spending plans, and she said that she was confident that the debt ceiling will be raised ahead of its December deadline, which will essentially prevent the government from defaulting. I am no economic expert, but I am not seeing a slowdown in inflation rate anytime in the near future. Yes, Americans shifted to goods versus services during the pandemic, but those goods were still produced by manufacturers which took in raw materials. The tomatoes that you purchased to make spaghetti sauce at home versus eating out were still grown by a farmer. They were just bought by a different person. The goods that we purchased were also purchased, in some cases, with extra money that was put into the system. Let's not forget the almost $6 trillion that has been injected into the economy since the beginning of the pandemic. When I say extra, I mean money that may or may not have been available to people had the pandemic not happened. While I feel that the money did have a positive impact, we are also going to have to live with the negative consequences, which are higher prices. On to the third story. According to one small business owner, the U.S. economy could come to a screeching halt. One small business owner warned Congress if labor shortages and supply chain disruptions aren't fixed quickly, it could cause a massive breakdown of the system. John Chuck Folk, a prominent home builder in Florida, detailed a host of obstacles that are holding back the housing industry and broader U.S. economy. He testified on a congressional hearing last Wednesday that the most pressing issue he sees is a huge labor shortage in which millions of open jobs are going unfulfilled. Companies can't grow faster and meet customer needs without more workers. Widespread supply chain bottlenecks are preventing companies from getting parts and materials on time or at reasonable prices. Folk had recounted how his company, Homes by John C. Folk in Florida, ordered windows last November and only got them in June, 8 months later. He stated trying to schedule material deliveries has become almost impossible. Even when he can get the materials he needs, Folk said the prices are going through the roof. He used to be notified by suppliers of price increases every January, Now he gets these notices every week. He also stated that if the supply chain disruption continues, higher prices will continue, inflation is going to hurt the US, then the chairman of the Federal Reserve, Jerome Powell, is going to raise interest rates, and our entire economy is going to come to a screeching halt if something isn't done quickly to get these people back to work. The sentiment of trying to find workers is something I hear in every business interaction that I have with small businesses. They are all having trouble finding people to fill the most basic of positions. These are jobs that pay well above the minimum wage and offer benefits to match. To John's point, if businesses can't hire workers, there's no reason for them to invest in new equipment, bid larger jobs, expand their factories, and anything like that. I'm not going to pretend that I know what it will take to return to a normal state of employment, but I'm sure that there's people that are much smarter than me on this task. Let's hope that they find a solution quickly. Thanks for taking time to watch this video, and if you like this kind of format, make sure you smash that like button and leave me a comment. Also, check out the articles in their entirety so you can get a better understanding of what's going on. Till next time, have a great day.